Hi and welcome back to Cheeky Crypto. In today's video, we're actually going to be taking another look at Bitcoin. So I'm hoping that with everything that's been kind of going on today, we're seeing a little bit of relief, a little bit of green, and that you guys are feeling a little bit more positive about things. But I'm going to dive down into the charts, take a look at what Bitcoin is currently doing, what I expect it to happen next with BTC. We'll have a look at Glassnode. We'll get a good idea as to what is going on with exchanges, BTC, and all that kind of good stuff. So as we get into it, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, go ahead, subscribe, tap the bell, select all notifications, and you are going to be kept up to date with all the videos that we do here at Cheeky Crypto. If you haven't yet done so, there's links to our Discord server down below. Why not go ahead, check it out? It's completely free, fantastic community, talking crypto 24/7. We usually drop things in Discord first as well, so you'll kind of get a good idea as to what is going on down there as well. If you're looking for a little bit more from the crypto space, why not check out the Patreon services as well? We hold 2 AMAs every single week with our Patreon members. Do Q&A, take a look at charts, do a bit of trading, all that kind of stuff, as well as strategies, exit points, buy and sell signals, all the usual kind of stuff that you would expect to see. So go check that out if that's your kind of thing, if you want to have a look at that. Right, let's jump on down into the desktop and take a look at what's going on here with Bitcoin. Okay, guys, so obviously yesterday we saw, I say yesterday, pretty much started on the 20th, really. We can kind of see that kind of pulling back down. So yeah, we had a big pullback. We've been talking about it for a while on the channel, so we were expecting the pullback, but I was expecting 37k. We crushed through that, and we did find some kind of stabilization down here. Briefly, and what we're looking for is a sentiment change effectively. Okay, so you can see that if I actually just grab hold of this, we'll drop that there. You can see here about $34,000 we found good support, and we can take a look at the low point. It was $34,008 exactly to the penny, and you can see that in the top left there of the screen, just at the top here. So you can see $34,008 and was our low point, and obviously we started to get some kind of move to the upside. Now what's interesting about this is you can kind of see that this is actually made up of 3 waves in itself, and that's quite an interesting one. It's very, very flat here, right? Nothing impressive about this move, right? We had that push to the upside. We tried to stabilize a little bit around that 37. We didn't hold it, and we knew this was going to be a good key area for support, along with the other technical analysis that we've done previously, but it did actually fall a little bit lower, and again, their expectation is to potentially come down towards that $32,000, a little bit lower than that, actually, 31,600 approximately. That's the possible kind of low points that we can see here in terms of standardization of an A wave and a C wave on the larger time frames, obviously not on the hourly here. So what you can of course see is that we had that pullback, and it's pretty brutal, one way to put in it, and then you can kind of see that coming down. Now obviously you can see here this kind of ABC, it's a really short B wave. And if you actually measure that distance, you can kind of get an idea whereabouts is this thing likely to go, right? And actually, you're not too far off a 1-to-1 ratio. And you can see here, the C wave pretty much is exactly, it's not exactly the same, but it's very, very close to it. Coming from a 1-to-1 ratio of our A wave. So i.e., that's the most probable area that you're going to find the bounce. And that's a good sign. Basically, you see this as an ABC move. It's not impulsive. It hasn't gone past the 1.382, hasn't gone up to the 1.618. Instead, we saw a definitive new trend kind of come in here. Now, the unfortunate thing is there is a double top. Okay, that's a bearish signal right there. Okay, you can see that coming in at about 36,200. Again, if we just hover above those candles, we can see the high point was 36,192 here, and 36,150 here. Okay, so a little bit, obviously my drawings they're not exactly on point, but you get the idea. You can see that we have that double top, that resistance blocker that being hit. Now here you can see that we are starting to track down, okay, and we can start to see that. Now the good news is that the Stochastic Rsi is actually being corrected quite fast, okay, and when that moves fast, it effectively means that sentiment is changing. Okay, so over this side of the room, when we're pulling down, the stochastic RSI was moving slowly as the price was dropping, essentially meaning that there's a lot of selling pressure. Okay, and the stochastic RSI is a measurement of momentum ultimately in terms of how sensitive it is to price. So when you start to see this price move down, a small amount, but the stochastic RSI reacts really rapidly to it, that's actually really encouraging. It makes us understand that the momentum for the downside aspect of it isn't quite there, and therefore now that we're oversold, we're looking for the reversal, we're looking for that push to the upside. Okay, so this is actually encouraging, but at the same time, I think I said this yesterday, if I didn't, I apologize, but we are kind of expecting to kind of trade sideways and around this area for a little bit of time. Okay, we're not looking for an instant kind of bounce to the upside. We're not looking for a V bottom. Okay, we're not looking for that kind of sharp push down and then a rapid push back up again. Okay, that kind of flash instance. I do expect it to be down here for a little bit. It could be a week, it could be 2 weeks. Timing's the hardest thing, but I do expect us to kind of be bouncing around down here for a while. I think until the markets really kind of get a bit of confidence to them, we should be very aware that there is potential downside towards that $32,000 range. Now, there's no guarantee of that. That's just the most probable area according to the weekly chart where we would expect things to go. And the same with the daily, okay? But this stochastic RSI, what it is indicating to us on this hourly chart is actually quite encouraging, right? Small kind of pullback here, and encouraging to see how quickly we went to oversold without doing too much damage. And an example of this stochastic RSI, rapidly moving to the bottom and seeing that price really pull back down is that A wave here. And then how quickly it moved from oversold to overbought without actually moving the price. And you're seeing the opposite effect. You're seeing that effectively the price pull back down and wipe the stochastic RSI out, allowing us now to continue the growth through the upside. So we are looking for some form of stabilization, but I do expect it to be very volatile and trade sideways. Okay, ultimately that's how I see it. I don't see us getting some magical green candles really pushing us back up again anytime soon. I expect it's going to be quite long-winded to kind of get there. Pockets of liquidity that have been mopped up by whales and institutions need to start to form again. Okay, you're going to start seeing some confidence in the market where people might start longing the market or starting to short the market, thinking that we're going into a bear market, to create new pockets of liquidity for the whales to slowly move the price back into. Okay, so for now we aren't seeing that. So we want to be very open and cautious to know that there is potential downside as people potentially now start to think it's over and we're going to go long. That will create pockets of liquidity lower, and therefore that's where the most likely the thing is likely to go down. It's going to go down to those lower bounds. Now, if of course we start to see the market create a load of short positions because there's a narrative of bear market out there, then you might actually start to see the price move gradually to the upside to find that pocket of liquidity as well. So we need to be cautious on both scenarios there. Leverage and all those kind of things, they're not good for us, and we want to be very cautious around what happens next here. We don't want to be entering any leverage positions, that's for certain, but we do want to be dollar cost averaging and buying when the right time comes. And right now, if you're a trader and you're looking at things that are overbought or oversold specifically, these are the opportunities, right? Because you are going to be expecting a push to the upside. I am looking to try to break this area for Bitcoin. We are looking to kind of push above the 36,200. That's going to be an interesting point because we want to break that and actually pull this back down. Now, in terms of what we're really looking for, a good strong kind of indication would be to try to actually pierce the 37,700, because that would invalidate any potential impulsive move down, right? So in order to make sure that we don't set a fourth wave and a fifth wave, just because we haven't gone to the 1.382 or the 1.618 doesn't mean that you can't just count 5 waves. You can, of course. It just doesn't align to what you would normally or most probably expect to see. Okay, so it's very possible that we end up with a fourth wave and a fifth wave, but it's not probable that we'd end up with that. So what we want to do in an ideal world is actually slowly move this price to that point of invalidation where we can invalidate a fourth wave and we can invalidate a fifth wave down. Okay, so we are looking at that. That's 37,700. Okay, so that A wave low point. We ideally want to break that point. Okay, obviously it's very possible that we do find this continuation to the downside if any more bad news comes out of the Fed next week, for example. Okay, lots of things that are going on from a macro scale. Now, obviously for Bitcoin here, we obviously said we kind of expected this. We jump up into our daily chart, and you can kind of see why, right? There was a big ABC move to the downside at $32,000. Now, of course, we have our bigger A wave up and our B wave down before going up into that high point of $76,000, the new all-time high. Okay, this is again a part of the macro view, very visible on our weekly chart. Now, for this, obviously, that does mean you're coming down into these lower ranges, and you know, if we actually have to go ahead and measure this retracement point, we'd have to actually come ahead and pull this back down on here, and we can, you know, argue that we've come down very, very low already. Okay, so coming down into this lower range, effectively, you know, coming down below our 786, it would be a wicket, I think, scenario. Coming down there, it's not invalidating the move, but it is something that we should be very aware of before potentially having another kind of step to the upside. Now, I think that this whole big A and B and C move on the larger scale is something that we should be aware of and very cautious of. The lower the price of Bitcoin goes, the closer and closer that gets to invalidation, and therefore no potential new all-time high is mapped out according to the weekly chart right now. Okay, so we do have the trend-based fibs, and they indicate all sorts of crazy numbers, but again, they don't actually indicate to us what is a bear market, what is a bull market, right? We have to kind of ascertain that for ourselves using various other indicators. The Fibonacci's aren't going to do that for us. We're going to have to make sure we have our wave counts correct and all that kind of good stuff. So, you know, we are cautious over this, but the ABC on the daily is indicating $31,000. But right now at $35,000, that is the 786 retracement zone on the Fibonacci, which we know also resonates incredibly well with Bitcoin, and it could be the reversal point. So although there is potential for the downside, this also could be the bottom, but we need to be monitoring how the Bitcoin actually performs on that weekly chart, on the hourly chart, before really calling whether or not we're going to go lower or not, right? $37,000 was an area that resonated incredibly well across all the time frames. We've lost that. We came down to $35,000 or $34,000. So right now we want to be very aware that there is potential downside towards that 32,000, but there's no guarantee of it because, again, it's the most probable area, but just because it's the most probable doesn't mean it's what's going to happen. Okay, so we are cautious about it, but ultimately we're right in that zone now. Okay, we're right in this bottom zone where we're looking for a reversal. And we're looking for a reversal not just on our hourly chart, but we're also looking for it on the daily. We're looking for it on the weekly. The Stochastic Rsi is heavily oversold on our daily. It's heavily oversold on the weekly. And we have strong potential moves to the upside. Okay, so obviously there's your kind of the understanding now, you know, what's going on with Bitcoin from a technical analysis point of view in the charts. But what about, you know, what's actually going on exchanges, right? And for that, we obviously go to Glassnode. Now, Glassnode has a couple of fantastic reports that I absolutely love. The first one, of course, is the exchange net position change. Okay, effectively, this is just showing us in a graph what has changed in terms of the Bitcoin position. Okay, so how much Bitcoin is on an exchange? Has more left than come in, or has more come in than has left, right? Effectively, that is what this graph is showing us. And what's really interesting about this, and what I really like about it, if I actually just show this on 2021 data into 2022, that is right up to current. Let me just do that. We can see that basically, you know, during this May 2021, you know, price of Bitcoin crashes and the amount on exchanges was increasing, right? So people were loading up the exchanges just to get rid of their Bitcoin. And that's very much what you'd expect to happen. You would expect to see a lot of Bitcoin go on exchanges because, you know, everyone's very fearful. They want to get rid of it before the price goes down into, you know, stupidly crazy low numbers because the bear market narrative was out there in May. Okay, so that's kind of what you saw here. Then we see Bitcoin's price starts to increase, and of course Bitcoin leaves the exchanges. So you see all these red things here. This is basically Bitcoin leaving the exchanges. And then something odd happened. And this was basically towards the end of September going into October. The price of Bitcoin went up, and the amount of Bitcoin on the exchanges increased. Okay, so this was either whales or institutions or nervous retail investors that were just basically getting ready to maybe sell some tops here, and be done with Bitcoin. They were wanting to get out of it because we're moving up after an all-time high, and they didn't necessarily know it was going to all-time high, so they want to liquidate it to get out their positions. Right, everything bounces after all. Or this was whales, of course, loading up the exchanges, ready to do some manipulation of the price to accumulate more Bitcoin. And what's interesting about this is obviously as the price pushes up, Bitcoin's coming in. And then, of course, as the price comes down after that 69K, we see more Bitcoin leaving than coming in. The opposite of what we saw in May. Okay, so when May we had that 65K Bitcoin and the price fell, we saw a lot of Bitcoin coming onto the exchanges. Get rid of it, get rid of it, get rid of the Bitcoin. We don't want it anymore. Now what you're doing is you're seeing the price fall down from 69K, but Bitcoin's leaving the exchanges, okay? And I think this is because it was preloaded and the prices were being moved very specifically to these pockets of liquidity. I've spoken about this a lot of times across various different Bitcoin videos. And then from here, obviously, you're seeing basically a lot of Bitcoin leave the exchanges. Until recently, a little bit of Bitcoin comes on. But again, these are really, really low levels, right? If we were expecting bear markets, like you were in May, this is the kind of thing that we're looking for. We're not seeing that. Instead, over the last couple of days after Bitcoin has had this significant pullback, what are we seeing? We're seeing Bitcoin leave. We're not seeing Bitcoin come in. So ultimately, this is really encouraging. Alongside all the other kind of stuff in terms of the technicals that we have in terms of trading view and price movements in general, this also shows us some pretty encouraging things as well. Of course, we can obviously take a look at the overall Bitcoin balance, the balance of Bitcoin on exchanges. Again, another fantastic report. Here, you would expect to see as the price of Bitcoin comes down, the amount of Bitcoin on the balance sheet of exchanges goes up, but that's not the case. Bitcoin's leaving exchanges. It's not coming into exchanges, not like we had in May, and therefore we are incredibly encouraged by this because it's an indication of what is potentially going to come next, and that is going to be that their supply and demand is going to get shocked. Okay, we have a shortage of supply because again we've been this low before, but not massively like this. And again, what we also have is going to be, at least in my belief, a demand for Bitcoin again, or demand for crypto assets again, once we kind of get through the next few days or weeks of volatility. Okay, and once that comes in, there's already going to be a supply shortage, there's going to be a shock to the system, and then ultimately we're going to start to see some rapid kind of growth. I think this is what takes us to the next all-time high for BTC. So this is actually really encouraging. I like these reports, and I'm going to try to do something for our Patreon members in terms of trying to integrate a lot of this into our Discord server as well, so everyone kind of gets a lot more visibility over what's actually going on, just outside of the standard technical analysis that you always see everywhere anyway. So I'm going to leave the video there, but hopefully you have found this useful and informative, right? Because there's a lot kind of things going on out there. There's lots of different opinions, lots of things kind of going on around Bitcoin bear markets and all that kind of stuff. We haven't really seen a decoupling of altcoins and Bitcoin properly yet. That hasn't occurred. We've got some pretty encouraging data from Glassnode, and we've got some pretty interesting things going on with the momentum in the Stochastic Rsi on the hourly chart, heavily oversold on the daily and the weekly. Ultimately, the data isn't indicating bear market, it's actually indicating pump. And what I think we're likely to see slightly longer term is a new all-time high for Bitcoin. A little bit of volatility on the shorter time frames, but ultimately, I'm not being shaken out by it, because the data isn't suggesting that I should be worried at all. Of course, there's going to be opinions, there's going to be narratives, there's going to be lots of people telling you, it's bear market and all that kind of stuff. I think it's far too soon to say that. We need to see, Bitcoin drop well below 28K before we effectively can say, we're in a bear market going down lower than the July low, for example. There are many other crypto assets, specifically the altcoins, that are incredibly volatile. Again, if you actually look at the history of them, like Chainlink, a 70% correction for Chainlink isn't uncommon. In fact, it's been doing that pretty much during 2021. It would pump up and drop down 70% and then pump up again to a new all-time high. So it's really important that you don't just take a look at them in isolation, but really take a look at the entire market, understand what Bitcoin's doing, understand what those individual assets have also been doing as well, in terms of what is the most kind of common, what is the average kind of pullback that particular asset actually has. For Bitcoin, 40% pullback is something that was very, very common back in 2017. For Chainlink, we can see that, a 60 to 70% pullback was incredibly common for Chainlink as well. So again, some fantastic opportunities to see significant gains in just trading some of these assets as well. So guys, hopefully you have found it useful. If you have, hit the like button. I do appreciate that. If you happen to be new to the channel, go ahead and subscribe, tap the bell, select all notifications, and you will be kept up to date with everything that we do here at Cheeky Crypto. With that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.